Hi there, welcome to Enriching Lives, where we talk about career, finances, personality enhancement, spoken English, job vacancies, and a lot more. If this interests you, do consider subscribing our channel. Your support means a lot to us. You are watching Financial Management Series Session 4, and if you have not seen the previous sessions, do watch them out. The link is given in the description below. I am making this series with the intent of helping out each one of you to become financially free. So even if you are at a beginner level, you don't really know much about investments, financial planning, stock markets, don't worry, I'm going to cover each and everything in detail throughout the series. In this video, I'm going to talk about certain key indicators that help us to understand whether a stock is worth buying or not. Before starting, would like to share with you about how did I got fascinated with this world of stock market and what was it that actually attracted me. My father had been an investor since 1990s, so at that time I was just a kid, and he used to watch CNBC. At that time you did not had much of an online trading and everything, so he used to watch CNBC and he used to talk with the brokers on phone. I used to hear the conversations, and he used to discuss a lot with my brother as well, about which stocks to pick, how to analyze stock is the best one to pick, and how to build a portfolio. So his strategies of maximizing his returns and building a portfolio was really attracting me to this world of finance. And I was very young, but then I used to listen to their conversations. I used to pay a lot of attention to their talks. Initially I could not really understand much of the finance terms, but as it was really interesting and appealing for me, gradually I got the grip and I got to know a lot about this world of stock market. So how does it functions? I really got interested and I started investing. Now coming back to our topic, so today I'm going to tell you about the kinds of markets and also certain key indicators that we use to understand worth of a stock. Before looking at the key indicators, let's first understand what are the two types of markets. You all must have come across this term bullish or bearish. When somebody says it is a bullish market or it is a bull market run, or if somebody says it's a bear market, so what does this essentially mean, and why is it called a bull or a bear market at first place? Let me tell you, bull market is one where the prices are just soaring high and prices are increasing like crazy, So when everything is going good, the market sentiments are positive, people are excited, thrilled to put their money into the market. It's a euphoric phase, you can say. So people are really happy because they're gaining a lot of money. That is what a bull market is all about. So have you ever given a thought, why is this called a bull market? Well, there is a logic behind this. When the bull hits with the horns, the person is thrown in upward direction and then the person comes down. So bull here signifies the upward movement, the increasing trend. Similarly, we all know when a bear attacks, it actually knocks down its prey. Okay, hence the bear indicates a downward direction or a negative pattern in the stock market. So next time whenever you come across these terminologies, make sure you can tell people that yes, you know the meaning of bullish and bearish market. So a bull market is positivity and a bearish market means the prices are moving down, people are actually suffering losses, and hence there would be a negative sentiment all over the market. So this is what a bearish market is all about. Now let's quickly understand what are the key indicators that I want to share with you in this video. The first one is EPS, or the earning per share. A very important indicator which makes you understand how to analyze a company's financial status. So EPS means earning per share. Let's say a company has 100 shares and the total profit which is booked by this company is 800. This earning is the net profit I'm talking about. Okay, so after deducting all the taxes and everything, so the company is earning 800 rupees and the number of shares that the company has is 100. Okay, so very simple, earning per share means 800 divided by 100. Earning per share, so total earning which is 800, the number of shares are 100. So 800 divided by 100, which comes out to be 8. So the earning per share of this company is 8. Now, how do you come to know which EPS is good or bad? You need to look at the track record of a particular company. How has the EPS changed over a period of time? Well, you can have access to this data easily. So you can log into sites like Money Control or BSE India. You can have a look at the charts and the patterns of a particular company, and from that you come to know how has the EPS changed over a period of time. Is the earning of this particular company increasing or decreasing? Well, ideally, if you want to put money into a company, earnings of that company should have increased over a period of time. See, you will like to bet on that horse, no, which is running faster, right? Similarly, in this case, definitely you would like to invest in such a company whose EPS has been increasing substantially over a period of time. So you need to have a look, how has the company been performing since past few months, few years, and with this you come to know, has the earning grown? If the EPS is increasing, well, you really come to know that it's a good sign. If the earning is more, which means that the company will be able to provide you more profits. Next, we have PE ratio, which means the price earning ratio, a very important indicator, very commonly used while doing a research on the stocks. Now, price per earning, what does that essentially mean? So let's continue with the previous example. So the company that we were talking about had an EPS of 8. If you remember, the earning per share was 8. Let's say the market price is 24 rupees. So currently you have one share of 24 rupees. The PE ratio could be found as market price divided by earning per share. So what is the market price? It is 24. What is the earning per share? It is 8. So 24 divided by 8, which comes out to be 3. So the PE ratio of this company would come out to be 3. Now the question arises, how is this PE important, or what is the significance of PE ratio? Well, let me tell you, it helps you to understand how much are you paying for 1 rupee earning of a particular company. If I talk about the previous example, if the PE ratio is 3, this means that for every 1 rupee earning of that company, you are giving rupees 3. So after every 1 rupee a company earns, you as an investor give 3 rupees. Now, as you can understand, the higher market price people are willing to pay for 1 rupee earning, the higher would be the PE ratio. If I compare two PE ratios, PE ratio of this company, which is 3, and a PE ratio of another company, which is, let's say, 5. In both the examples, you can very well understand for company A, which has a PE ratio of 3, you are giving 3 rupees for every 1 rupee earning, and for company B, which is having a PE ratio of 5, you are giving 5 rupees for 1 rupee earning. Now tell me, which option would you choose? 3 rupees or 5 rupees? Would you like to give 3 rupees for 1 rupee earning, or would you like to give 5 rupees for a 1 rupee earning? Well, I'm sure you all would agree to this fact that you will like to shell out just rupees 3 for a 1 rupee earning. Why would you give more? That means stock B with a PE ratio of 5 is expensive than stock A. So the PE ratio of stock A is 3 and the PE ratio of stock B is rupees 5. Hence, stock B is more expensive than stock A. Now, let me also tell you one more thing. PE ratio is not the only factor that is to be considered while buying a particular stock. You need to look at the other parameters. So, it may happen while doing a research on both these companies, company B would be more suitable on other parameters as well. So, I'm not saying that you need to make an opinion based on PE ratio only. So do not make a judgment just by the PE ratios. But if I talk about PE ratios, yes, if everything is same for two companies, you should definitely go in for a company with a lower PE ratio, right? And as the stocks have their individual PE ratios, even the Sensex and Nifty have their PE ratios. The PE ratio of Sensex ranges from 10 to 30. So if I talk about the PE ratio since 1990s, till 2021, it has been in the range of 10 to 30, 35. If I talk about today's value, well, the PE ratio of today's Sensex is around 34, which means that for every 1 rupee earning made by all the companies that are put together under Sensex, you as an investor are giving 34 rupees. Tell me, if the PE ratio of Sensex is 10 at a point of time, and the PE ratio of the same Sensex is 34 at a particular time, what do you think is the correct time to buy? You will surely say, I'll enter the market or I'll buy the stocks when the PE ratio is quite low, which means that the companies are fairly valued. They are not too expensive. So if I give you these two options, Sensex at 10 PE ratio and Sensex at 34 PE ratio, you can easily understand which is expensive and which is a fair value, right? So if I talk about the current situation, we all know the current market state is really euphoric. People are buying due to the momentum that's there in the market, and a lot of stock prices are inflated at this point of time. They are far above their fair value. They are very costly. They are overvalued. If I talk about today's scenario, it's a momentum ride. Excitement is there and people are on a buying spree, and because of this, the market prices of the shares are just shooting up. So the market is bullish right now. If I talk in terms of bullish or bearish, I hope the concepts are pretty clear to all of you. We all know prices fluctuate because of the demand supply. If demand is high, the prices would go up, right? The prices would rise. And if the demand is less, the prices come down. So when people are just selling, which means that supply is more, so in that case, you witness a bearish market. There is a sentiment of selling in the market. Everybody is like selling. And because of selling happening, volumes of shares are sold. And because of this, the market price crashes and you see a dip. Right? On the other hand, if people are just buying and buying, that means that the demand is more than the supply. And we all know if demand is more than supply, the prices would shoot up, it would increase. This is a scenario of a bullish market. Okay, so prices up, demand is more, bullish market, high PE ratio. Prices down, demand is less, supply is more, bearish market, low PE ratio. Now you got to understand one more terminology. If I talk about the share prices, there are three categories of shares. One which are fairly valued, one which are undervalued, and one which are overvalued. So if I say that a particular share is overvalued, this means that according to its fundamentals, according to its profits and earnings, if price of a share should be, let's say, 100 rupees, and if the current market price of a particular share is 120 rupees, which means that it is overvalued. According to its revenue model, it should be 100, but because of momentum, because of buying spree, the price has increased and it has become 120, but the fair value is 100. Okay, and at the same time, if fair value is 100 and you are able to get share at a market price of 80 rupees, this means that the share is undervalued. So its real value or the intrinsic value is 100. You are able to get it at 80 rupees. This means that the share is undervalued. So always remember, whenever you have to pick a stock, try to find out what is its fair value or the intrinsic value. And in this way, you will come to know that definitely you should buy it at a fair value or undervalued price. And you should never go in for overvalued price. And this will help you to take a decision. Should I buy now or should I wait for it to actually reach point of fair value? So all these parameters will help you to research on what kind of stock you should buy. I hope you found this content helpful. And if you really liked it, do type in the comment section. Also, let me know whether I should make a video on fundamental and technical analysis of a stock. I'll see you soon with yet another video. Till then, you take care of yourselves. Bye-bye.